Hey everybody, it is almost April. I cannot believe that. I'm going to do a quick update on the stocks that I think are the best buys right now. It's been kind of an interesting month or so in the markets. We saw the S&P 500 fall into correction territory briefly. It's still down significantly from the peak, and the market is generally kind of volatile and uncertain right now, so we're going to try to find some good long-term opportunities that will also let you sleep at night. So before we do that, please take a minute and check out the link you see on your screen, fool.com/Frankel. You can get the top 10 stocks to buy right now from the Motley Fool. They are my sponsor of this video, and it is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel, and I will put that in the video description as well. So let me go ahead and share my screen without any more delay, and I'll get right into my first one. These are in no particular order, but one of my top 5 to buy right now, and I'll also give you my numbers 6 through 10 kind of in a brief format. So you'll get 10 of my favorite ideas right now. PayPal has just been beaten down in 2025. You can see its year-to-date performance. It's down 17% for the year. Even though its earnings numbers were pretty solid, it's still buying back stock very aggressively. Management rolled out a bunch of growth initiatives, most of which are not reflected in the numbers yet. PayPal's ad platform, for example, didn't even launch until October. So it was barely impacting the fourth quarter numbers at all. That's just one example. The company thinks it could do a better job of monetizing Venmo in the near future. And at its recent investor day, PayPal said that it sees a path to get its earnings growth rate back up to 20% sustainably over the long term, which it can do that. The stock is an absolute steal today. And the company, it trades for about 14 times forward earnings. Very cheap stock. It's got a net cash position, fantastic balance sheet. And I really like what they're doing over there. These are not in order, but that could be my number one right now. Number two, this one shouldn't be a surprise to anybody. Realty Income, ticker symbol is O, one of the longest standing stocks in my portfolio. It's a compounding machine. They own real estate. They have about 15,600 properties right now, most of which are occupied by what I call recession-resistant retail. You can see in the picture right there, they own a lot of like drugstores and convenience stores and things like that. It's up slightly this year, pretty much because expectations of interest rates have kind of cooled off. But because we're still in a relatively high interest environment and real estate, especially slow and steady compounders, are very rate sensitive. This one's still down about 15% from its 52-week high, pretty much on interest rate concerns. The business is doing fine. Occupancy is high. They're still finding ways to grow. They're buying more properties, and the business looks very healthy. Right now, Realty Income has a 5.8% dividend yield, which it's a great time to get in. It pays monthly installments, and with a 5.8% yield, you don't need that much price appreciation to beat the market. And this company is beating the market over the long term. Number three, I think SoFi is giving investors a second chance opportunity to get in. It was one of the best performers in 2024, but it has pulled back a little bit. Since it reported its earnings in late January, the stock is down 26%. I think it's even more now because that was the morning of the day I recorded this, and it's doing poorly right now. Under a $15 billion market cap, the company's earnings look very strong. They beat estimates on revenue. They missed on EPS looking forward. So essentially, they're forecasting to grow faster than expected, but not quite as profitably. But the company's got great growth momentum. It could be a big winner of falling rates, of lower regulations, which, I mean, the Trump administration is very anti-regulation. There's a lot that could go right for this company, and I do think it's going to, post great first quarter results when it reports in April. Number four, and this is a new one for me, AMD, Advanced Micro Devices. It is an AI/tech stock that is starting to look like a value stock, which I'm a value investor. Down about 5% for the year so far, but down about 50% from its 2024 peak. And it has several promising growth areas. A lot of people think of AMD as like NVIDIA's distant second competitor, which it is in the data center GPU space. But there's a lot more to like about this business. The PC business is still impressive. They've done a great job of taking share from Intel over the years, and that could still have some ways to go. They're a big maker of gaming chips, like that picture depicts right there. So that's a big growth area. They have a big business in autonomous vehicle chips. So that could be a big growth area. They trade for 25 times forward earnings. Their management team, particularly their CEO, Lisa Su, has done a fantastic job over the years. And it has been a mistake to bet against AMD, and I wouldn't do it now. And number 5, one of my favorites, Dreamfinders Homes. I think this is a great long-tailed growth opportunity that's just stuck in kind of a terrible market environment right now. It's also the smallest company on my list right now. They're up about 4% for the year, right? But they're down 45% from the 52-week high. A lot of tariff fears are surrounding this stock. The lumber used to make houses, a lot of it comes from Canada. A lot of appliances and other things that go into homes are from other places. I do think the fears can be a little overblown. It can be a big winner as interest rates come down and people start, and the real estate market starts to really defrost. And there's a lot of pent up demand right now for homes, especially entry level homes, which is Dreamfinder's bread and butter. They operate some of the most exciting real estate markets in the U.S., specifically in the Southeast, where a lot of net migration is taking place, and homes are still relatively affordable. They use an asset light model to grow, and I just think this one could have a very, very bright future ahead of it. And right now, it is beaten down. But I do think as the real estate market thaws, this one's going to be a winner. And here's the honorable mention. This is my next 5. Again, in no particular order. So we have I'm going to do another video on this one because it's another new stock on my radar list. Applied Materials, ticker symbol AMAT. Ally Financial, ALLY. Sirius XM Holdings, ticker symbol SIRI. Alexandria Real Estate Equities, ARE. And General Motors, GM. So that's my top 10 right now. More details on the top 5, but that is my top 10. I'd like to know what you think. Which are your favorites on the list? Which ones do you think I should scratch off the list? Leave me any comments or questions. I'll do my best to respond individually. And please stay tuned right now for a message from The Motley Fool. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.